Hey guys, hope you are all having a great day. Today, the market was relatively stable, until all those after-hour earning reports started coming out, sending all major indexes and stocks tumbling down. Facebook, Twitter, Spotify were among the biggest losers, and all the rest of the stock market started slipping up again. I warned you guys about this in Sunday's video, that earnings would have a huge impact this week in how we traded. AMC and GameStop were not isolated from this fall, and the prices were affected. We also had even more positive news coming from AMC, which I am extremely bullish about. I want to encourage you to watch my morning video if you missed it, and also invite you to my Discord so that you can come hang out. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Actually, I want to begin this video with a small segment related to the corporate media and one of its biggest sponsored shills, Jim Cramer. Cramer became very well known in the meme stock community, since he covered a lot of what happened during our runs last year. Many times, he referred to them as being bad investments with no fundamentals, claiming the companies simply had little chance of turning their business around and that even then, turning big profits to justify their price was impractical and impossible. He subtly suggested people to sell off on AMC and GameStop because of these issues, and many times mocked investors for not knowing what we were supposedly doing. Well, I am happy to announce that Jim Cramer is no better investor than you are. Last week and this week, we have had a lot of earning reports from major companies such as Spotify and Netflix and PayPal. Over the last couple of months to even just 2 days ago, Jim Cramer has been telling investors to buy these companies as they are apparently great investments to make. Well, earnings came out, and all three companies reported losses and/or problems growing. As such, these stocks have nosedived, with Spotify and Netflix both losing well over 20% of their entire market capitalization in just hours. For someone who has his own show, who is marketed as being a triumphant and knowledgeable expert whose opinion and advice we should all follow, his calls seem to be as accurate as those on Wall Street bets. His accuracy is less than average, and I stand to question why on green earth do we stand to even bother listening to such a buffoon. Goes to show that placing trust in these experts is the biggest mistake one can make. If you had invested in his alerts, you would probably be down over 50% on your entire portfolio right now. I have been saying it forever, stop listening to the media and stop admiring anyone on the news, regardless of what they say. Stay completely zen and disconnected from the voices of those being paid to say things on television. Let's now shift our attention to the good news. AMC published a press release on their website where they announced senior secured notes offering and proposed redemption of existing senior secured notes. AMC stated they have commenced an offering of $500 million of the aggregated principal amount of first lien senior secured notes. Now, I don't want to convolute these great news with boring talk, so let me just cut straight to it. AMC is refinancing their debt with new one which will be more financially sound and favorable to reducing their entire debt at a faster pace. What this does is postpone debt until the year 2029 instead of the previously stated year of 2025. The benefit of this is that AMC gets to save a lot of money that they would have otherwise had to spend on fees. This will have a very positive impact on their operations costs, because lower payments mean more cash flow and a faster way to pay off the principal debt. They bought back their old debt which had terrible fees and replaced it with one that will allow them much more room to breathe and operate. This to me is way more bullish than the tease to a fantastic fourth quarter earnings report that they announced yesterday. I talked about it before. The massive debt AMC has always weighted on them heavily, and you can tell by the way Adam Aron has talked about the issue before. With this lifted off their shoulders, I can expect a lot more growth and risk-taking to explore new ways to generate revenue streams. This is a super massive catalyst that will help propel AMC up, and it's no wonder why on such good news does the stock end the day over 10% negative, accounting for its after-hours performance. So let's talk about the stock market. Meta Platforms, previously known as Facebook, fell off more than 22% after disappointing quarterly earnings. Spotify dropped more than 11% after saying their growth rate is down from the 19% in the third quarter. Because Meta has such a bad earnings, it brought down many other social media network operators like Twitter, Snap and Pinterest, which all collectively weighted heavily on the major indexes and brought them all down once again. It doesn't really matter the percentage of gains the major indexes had today since all three went down in the after hours upon the earnings report. Last thing I want to report on is in regards to Tiger Global Management, another hedge fund. Tiger and Melvin Capital both underperformed the equity markets in January. Tiger logged a 14.8% decline for its hedge fund and Melvin slumped 15% according to people familiar with the matter reported by Bloomberg. Remember that Archegos was trading under Tiger Global. The Nasdaq Composite Index fell 9% for the month of January while the S&P 500 slipped 5.3%. Hedge funds are all struggling with heavy losses and it makes my absolute day to report on their bearish performance. Let's now talk about today. The Fed submitted over $1.626 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 8% for the day and passing over 10% during the after hours as losses from Meta dragged all indexes down. That's not to say that it was the only thing waiting on AMC. The stock had a really bearish performance overall from the onset of its trading session today. It opened relatively weak, trading below the VWAP. Upon market opening, AMC fell below 16.20 only to rebound up to 17. After that, it started falling again, testing and breaking previous support, dipping to 15.88. It attempted to break above the VWAP but ultimately failed, testing 15.88 as support again and breaking it, falling down and closing at 15.42, below the VWAP. AMC is likely to find support at 15 and 13.75. Resistance will be met at 16.57, 17 and 18.25. AMC is going to continue being dragged down and I think hedge funds are plotting for it to finish the week below $15. I find it very likely that we will trade weak tomorrow, since even bullish news had no effect on the stock. GameStop traded bearishly, losing over 11% during normal hours and even more so during the after hours. It opened to trade relatively neutral during the pre-market. Upon market opening, GME fell down to 106 before bouncing up slightly above 111. It was unable to build strong support here, so it ended up falling again back down to 103.58. It attempted to break the VWAP but retraced back to test support at the same price. After a little period, GME once again tried to break above the VWAP, only to fall and this time break support, falling back down to 98. It slightly jumped, closing at 100.04, below the VWAP. GameStop is likely to find support at 95 and 90. Resistance will be met at 105 and 113. I find it more likely than not that shorters will try to keep the price below 100 by Friday's closing. With this recent poor market condition, shorters will have a lot of leverage in dipping the price further and further. Remember that looking at the options chain, it is clear that shorters set GameStop and AMC both to be bled out for a while, so don't expect anything major until the quarterly earnings are an announcement. GameStop is still to announce their NFT platform and officially release it, so we are waiting for that. All that aside, I think we are likely to retest previously tested bottoms that we reached last week. Stay bullish. This is nothing unexpected if you have been watching my videos. Like I said on my Sunday video, earnings were going to have a very marked and significant impact on meme stocks this week, and as we now contend with the possibility of more bearish earnings, we are going to be testing support a lot more frequent than resistance, and that goes for pretty much all major indexes, not just meme stocks. We are awaiting some employment numbers to be released tomorrow to see how the nation overall is doing. That will have a significant effect on the market as it will give an impression on how strong the economy is doing overall. If the numbers are bad, you could potentially see a sell-off. If the numbers are bullish, it could help consolidate the markets and drive investors back in. I find it very unlikely markets will begin to rally tomorrow like others have suggested, so keep your expectations to bare minimum on the floor. This is the best dip we have had for months and right now anything you buy is pretty much guaranteed to give you a profit yield, so do not miss out on this opportunity. Thank you all so much for making it to the end of the video and don't forget to come on over to my Discord. Also, be sure to watch my morning video. I have been making them for you guys since there is so much interest in them. We talk about the topics that nobody else is talking. giving much insight where it's needed in order to truly comprehend all the things that are happening in the markets and in the economy overall as well. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.